Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Today we're looking at artificial intelligence, and my guest is Bob Jenkins, Global Head of LIPA Research at LSEG. Stocks related to artificial intelligence seem to be on a never-ending surge this year. As the largest chip maker for AI technology, Nvidia is benefiting from heavy Wall Street investment as companies race to adapt and apply the technology. The chips provide the heavy processing power needed to develop new applications. Recently, Nvidia became the first chip maker to be valued at over $1 trillion. Other chip makers have also seen big increases in their share price, including the likes of US rival AMD, Taiwan semiconductor manufacturing company, and Dutch firm ASML. But it isn't just hardware that's been needed to drive AI growth. Microsoft first bet on OpenAI, the parent company of the popular language tool ChatGPT, back in 2019 with a $1 billion investment. Since then, it's been estimated that it has invested a further $12 billion as it integrates the technology into its own search engine, Bing, for example. But has the rush to invest in AI been too quick? And if you're thinking of buying stocks in the sector, have you missed the boat? Well, to help us answer those questions and more analysis, I'm joined by Bob Jenkins, Global Head of LIPA Research at LSEG. Bob, tech stocks have seen a massive ramp up in their valuations, partly due to AI. Is the bubble about to burst?
Good question. Is obviously what everyone's talking about nowadays right now. And when you think about the parameters of a bubble and looking at the dot-com bubble in particular, are we there yet? I don't think we are. When you think about the valuations that we had back then at the turn of the century, they were 100, 200, even 600 in terms of PE ratios on these stocks, well overvalued. Right now, Nvidia is getting a little out of hand. They're over 100, but most of them are in the 30 to 50 range. It's still, it's a lot, but it's not bubbly at this point in time. I think very importantly also is that there's real business models here. When back in the dot-com bubble, it was all about what we're going to do 10 years from now, where things are going. Nvidia's actually got actual revenue gains that we're seeing right now. All the companies really that are now called the Magnificent Seven, if you will, all have a stake in AI in some way, shape, or form, and have had for years, and thus there are real business models underneath this right now. So in terms of are we maybe running ahead of ourselves, I think perhaps we might be just a bit. Does it mean if you're a long-term investor you shouldn't get invested? I think you could consider getting invested, but right now certainly they've gotten a little bit ahead of themselves.
And looking at the traditional tech firms, the sort of the Facebook, Meta, Amazon, Netflix, Microsoft, Google, should they be worried about this surge in AI?
I think most of them have a stake in it already. If you think about it, again, it was the FANGs, now the Magnificent Seven. All these companies have had long kind of running business models based on AI. Amazon, for instance, logistics, and Alexa, you think about Siri and Apple. Microsoft, of course, with ChatGPT. They've all already got it incorporated into their business models. And in many cases, they're either already utilizing it and getting productivity gains out of it, or they have business plans to do so. And I think so for that reason, the chances of them still having this kind of leadership that kind of narrow breadth band has had so far this year in the markets is likely still to continue over the next several years. Maybe, again, a little ahead of itself right now, but certainly a place to watch over the next years.
And there seems to be two very clear sections within AI. It's either hardware or software. Where would you advise people to invest in?
I think one of the things that's still a big question mark is software development right now, right? If you think about it, one of the things that AI is probably really well geared to do is to code. So if I'm a software developer, unless I'm one of the people actually developing the AI code, I would think I need to be a little bit worried, but it's all what I call the hardware or infrastructure side seems to be the better bet right now, because these are kind of, if you will, real pieces of equipment that need to be incorporated into the AI value chain that are going to have to be purchased at some point in time. So when you think about, again, NVIDIA, there's a good reason why it's going up, and some of the other semiconductors as well, data centers and so forth, server makers, all these are going to build into that infrastructure play.
Looking at it on a more holistic sort of a view, AI looks like it could end up replacing people in their jobs, could increase productivity. I mean, what impact could you see economically with the emergence of AI?
100%. I think what really resonates with me is an anecdote from a friend of mine who is a consultant said, we used to have a team of 4 to 5, MBAs who would parse through and essentially assimilate these large stacks of research that we use when we're beginning an engagement. AI did it in an hour. And when you think about that, I call it kind of mental manual type work, whether it be a law firm, a consulting firm, or even iBanks, all those kind of well-educated junior analyst roles are going to come under a little bit of pressure right now if we're able to farm that out to AI, which ultimately is going to be a good thing, I think, for the companies in terms of productivity. Also a great leveler, as some of the big firms that had these big staffs don't have that advantage anymore over some of the smaller shops who can now use AI to essentially have that same staffing type equivalent.
So rather than doing an MBA in business administration, maybe do something involved in tech.
I think tech might be a way to go.
Bob Jenkins, many thanks for that.
Thank you.
And that is your roundup of artificial intelligence sector. I'm Ramzan Karmali, and this is Reuters.